Good evening and welcome to tonight's webinar where we look at member-only content, ASX investment opportunities in review for the 11th of October. The advice provided this evening is general advice only. Investor Signals offers a broking account service which provides access to our model portfolios across both the ASX and US markets. The updated table here on screen captures the 5-year average returns, which has been updated to include the September quarter data throughout the September quarter, so for the 90 days, the Aussie equities, and this is taking the assumption of investing in every stock that's under buy conditions in the ASX 100, and obviously selling out of the stock on the first sell signal. The Australian equity portfolio was up 4% for the quarter. The US portfolio was down a little over 1%. And as you can see there, the 5-year averages are adjusted accordingly. So depending on your broking account and whether you're following a subset of this, so the most popular is clients following the ASX 50 model, a combination of maybe the ASX or the US high conviction or both. And the other popular model that clients follow is the ASX iShares ETF. So if you'd like to know more about our broking account service, please contact me on 1300 614 002. The products that we provide, the research, which is the Investor Signals member area technology, I'll be covering that this evening. The broking account, which we just looked at, or the managed funds. So if you'd like to know more about those, just give me a call in the office. For those joining for the first time or part of your 30-day free trial, just a reminder, at the end of the trial you can join as an Investor Signals member for $1,320 for the year, and that'll give you access to the technology and the features that I'm showing this evening. If you'd like some tuition during your trial, again, just contact me in the office and I'm happy to help you set up your model portfolio alerts and show you some of the features and functionalities. Starting this evening with a graph of the Nasdaq. So as US interest rates or the yields on 10-year bonds have moved up a little, and put that in context, I think we're trading at around 1.2, 1.3 a few months back. We're now up just over 1.6%. What we've seen is a little bit of sell-off in the growth areas of the market. So technology's been one area of that, healthcare's been another. Since the end of last week, so roughly around Wednesday last week in the US, we've saw a little bit of a recovery from that, and it feels like yields are probably running into some resistance at around this 1.6 level, and that was supported by the slightly softer employment data that came out on Friday night in the US. So if the market forms a view that interest rates are not likely to rise too quickly, and at the moment the consensus is that that'll be 2023, but obviously the market's also grappling with what does it mean as the Fed starts to unwind its bond buying program, or the printing of money, which obviously drives liquidity into the stock market. So that's something for the market to think about. The Fed's obviously forecast that they'll be looking at that from November onwards. But what we've seen here is the Nasdaq correct, roughly about 7% from the highs, and then in the last few sessions of last week we've seen a recovery. So I've shuffled the support line up under the lows there, and I'm interested in just keeping an eye as to whether this technology area of the market can build support on top of that level and continue with an upward move, or do we break underneath it and actually start to build resistance underneath. And I'll just keep you updated on the blog regarding that. Looking at the other major indices, the S&P 500, similar pattern. It's rallied above. We'd be looking for this to find support on top of that level. And if we look at our local market, the index, it's back above the 10-day average, and you could either look at the support level from last week's low there, or even shift this up to today's low and just recognize that we're really looking for the market to build on top of this. The big shift in the Aussie market today has been money flowing back into these iron ore stocks, and we'll have a look at those, and also some risk on in regards to exposure to Asia. So we've seen the IZZ and the IAA ETFs rally, and I'll take a closer look at those in this evening's presentation. Just to backtrack what's been posted on the blog over the last 7 days. So clicking on the news button loads the homepage of the research blog. You get the signals post, and I'll just share with you at a glance some of the points of interest here. So Domino Pizzas back under algorithm buy signals. This health HLTH ETF, I think that's worth making a note of, and I'll come back and revisit that. IHD, which is an iShares high dividend fund. I've flagged that on the blog, and we've looked at that in the last week or two's webinar. But again, I think that should be something that's on your watch list. The iShares Asia 50, as you'd know from prior weeks, this is my preferred exposure into a recovery play in the Asian stocks, and one of the catalysts has been Charlie Munger doubling down on his exposure to Alibaba, and that seems to have been the catalyst just in the last 24 hours that have seen money pour back into these Asian equities. So the iShares Asia 50, I think that's getting down to a level where it's likely to find support and potentially an inflection level where a rally gets underway. The food ETF, I've covered that a few times, but support just under $7 there, and I think that's a reasonable consideration in this market. CIMIC, higher risk, but trying to identify that inflection point where it begins forming a higher high and a higher low, and I suspect based on an uptick in earnings over the next 6 months, we might be pretty close to that for CIMIC at the moment. BHP, a buy down here, so now we'll look at this further, but BHP, Rio, Mineral Resources, Fortescue, there's a number of ways of playing exposure to the recovery and resources. The other is the OZR ETF. The September algo signal, so if we just have a look at the performance of this, so the 5-year performance of the S&P 100. So again, all signals across the S&P 100. The 5-year average running just over 15%, so outperforming the XJO by a wide margin. The All ETF one is interesting. Probably doesn't get quite as much attention as it deserves, but you can see there that it's outperformed the index by a little over 4%. Delivering solid returns, and that's capturing all the ETFs listed on the ASX. The S&P 100, so this captures the largest 100 companies by market cap in the US. It's up around 17, or it is up 17.53% on the 5-year average. So what that is a reference to is clicking on the model portfolio here, going in, looking, for example, at the ASX 100, and it's capturing the performance of all these stocks, which again is buying the stock on the first algorithm buy signal and selling it on the first sell signal. And if you're joining us for the first time as we toggle through some of the charts tonight, I'll help point that out, and it'll make a little more sense for you. So those models, the ASX 100, the ASX All ETFs, and the US S&P 100. Just a reminder that we've added in some new ETF models in here, the iShares, the VanEck, the ETFs, Beta Shares, and Vanguard. So example there with Vanguard, click on that, days held, so the least number of days to the top, and you can see here what ETFs specifically that are provided by Vanguard are in our model at the moment. And again, whether it's Vanguard or the one that I use a lot and is popular among our clients is the iShares model. So again, if we were to click on that, you can see here we've had a couple of new additions to that. I point out here that the healthcare, so this is the iShares, which is the global healthcare. The other one that I think is worth adding to your watch list is this one here, which we've had a recent signal on. It's the VanEck Vector Global Healthcare ETF. I've created a fairly wide band here, but to me, somewhere between this 11 and 1150, I'd expect this to find buying support. So now, whether you choose to use that as a mechanism of gaining exposure to the healthcare sector, or coming in and looking at that iShares one, which is the which is the IXJ. So I'll just click on that and load up the chart there. So similar patterns, but either the IXJ or the HLTH as considerations for that healthcare ETF. Alright, this evening what I want to do is I'll quickly move through the ASX top 50 stocks that are under algorithm buy signals, and we'll really focus on where these opportunities are in the market at the moment. So I get the percentage gains to the top, organise these in buy signals, so I'll get part the way through the list. They'll switch from buy into sell, and I'll just highlight that. So starting with the first stock in the model portfolio, Fortescue. It's been in the model for quite some time, and we're now back under algorithm buy signals support there at 1367. Just highlighting that the buying interest in this today, and it's obviously back above the 10-day average. So for traders, you could be on the long side of this with a stop if it reverses back through that moving average, or if it reverses through that session low. Longer term portfolio investors would simply be remaining long Fortescue at the moment. I wouldn't be surprised if we see a rally in iron ore and a switch to sell signal in Fortescue in the coming months. I think the stock's going to form a lower high formation, maybe back up. It could be anywhere from sort of around that $20, $22 level, but certainly be happy to take the profit on that. If we have a look at the gains in Fortescue, that since it's been added to the model, it's been in there since 2019. It's up 148%. So if we were to end up exiting the trade at around $20 odd, that'll turn out to be a good investment for the portfolio. It's been in there so far for 808 days, and obviously it's likely to stay in there a little bit longer at the moment, given that it remains under buy conditions. But I can see in the months ahead of forming a lower low and a lower high. Goodman Group back under buy conditions, so the sell-off that we've had here from $23.50 down to $20. I'll put the support at a little lower. Whether we actually get down there and test that, what it would really take is interest rates just to shift a fraction higher in the US, maybe another couple of days of selling. I'd certainly be comfortable being fairly aggressive on adding Goodman Group at around that $20 level. I think the earnings growth is still attractive, and I think longer term, or in the medium term, I don't think you get this sustained push higher in interest rates. So Goodman Group, one of the better performing stocks in the model. Macquarie under buy conditions, still think financials remain largely flat. Key catalyst for the financials is obviously going to be Wednesday in the US this week, when the US banks begin getting underway. So you've got big bank results Wednesday, Thursday, Friday in the US this week. So NAB under buy conditions. Rio, as with Fortescue, similar pattern. So we hold BHP, Rio, Fortescue. Now we hold the OZR ETF, so we've built up some exposure into this resource trade. Again, if you're a trader, you're long the stock, stop losses below the moving average or below that pivot low there. But for the moment, we're starting. So just to put that in context, iron ore's gone from roughly $98, I think, at a low, back up to around 125 a tonne at the moment. The iron ore stocks have lagged, but we're now starting to see money come into those stocks as well, which kind of also fits in with a little bit of that risk-on sentiment with regards to Asia or Chinese stocks. Westpac under buy conditions. Wesfarmers. So with the restrictions easing, I think you can be comfortable starting to add Wesfarmers into your portfolio. I've created a band there from $50 to essentially $55, so you might want to just manage your position size, put half of it to work at around this 55, and to save the other half of the position if we were to see softness in the US market, which is not our base case at the moment. But if we were to see a pullback in the US market, then you might have the capacity to add to that Wesfarmers position on a dip. Woolworths we like. We think that's a defensive place and likely to deliver some level of earnings growth. It is a little expensive, and as I mentioned in the last earnings update, we started to see commentary around costs increasing, but happy to have been a buyer of Woolworths on that pullback at $38, and we could see that really trading between 40 and 42 over the near term. Aristocrat Leisure, one of the better performing stocks in the model, remains under buy conditions. ANZ under buy conditions. BHP, so just pause on this one as well. So it's in the model portfolio. We've added it at or near these levels. It's back above the 10-day moving average, so traders can stick with the long side of this trade. And again, a stop loss on a break below the average or a break below that pivot low there. So that pivot low as a reference point is roughly $35.80, and we'll keep an eye on that going forward. Brambles, there's room for this in portfolio, so the correction from 12.50 down to 10.20, we think this is a buying opportunity. We're starting to add to it. In a relative, it's not an overweight position in portfolios, but I do think there's room to start to add BXB into portfolios. CBA, still the preference remains Macquarie, but some exposure to NAB, Westpac, Macquarie, CBA all make sense, but I don't think there's too much in the way of earnings growth there given the crimped top line revenue. Coal's under buy conditions, so it's an algorithm buy there at around 16.50 and comfortable adding that on the pullback. Fortescue buying that as we've looked at. Goodman Group we've covered. Maybe I didn't have that select. Yeah, ASX 50, so where did we get up to? So, Macquarie Lendlease, I like the look of this as a longer term recovery play. I think maybe 12 months out from now, we start to see much better earnings trends for Lendlease. The market will start to look ahead and begin pricing that in, so I wouldn't be surprised if we're fairly close to the low there in Lendlease. Computer share I like, as I do with Link. ResMed, keep this on your watch list. I think we're likely to see another algorithm buy signal somewhere between maybe $30 and $35. So we're getting fairly close to a level where we're expecting buying interest to increase there and a switch to algorithm buy signal again. And I'll draw your attention to that via the blog. Wesfarmers we've covered. GPT under buy conditions. Mirvac is a new buy condition on the sell-off today from 325 down to 280. That's under buy conditions. AZJ is a new addition to the top 50 model portfolio. Aristocrat we've covered. Stocklands, I think that's, there's room for these REITs in the portfolio. We've discussed in previous weeks as an alternative to owning all of them. The SLF, which is a ETF basket trade, is an alternative. Sonic Healthcare, again, worth pausing and just having a closer look at this. Whether it gets down and tests sort of that 37.50 level, closed below the moving average today, but I'd be very surprised to see Sonic much below, say, 37.20, and might just put in that added trend line there, and we'll watch this over future weeks. But somewhere between that level there, I'd be very surprised if we got back down below sort of 36.50. To me, that's your accumulation range there in Sonic Healthcare. So if you don't own that, think about that as a level to add it into your portfolio. Tabcorp, comfortable owning this. The downside's fairly well protected. Brambles, we covered that. That's an accumulation. Cochlear, I like. Xero, best, I think, tech stock in the top 50 at the moment. Is a little expensive, so manage your position size. If you don't own it at the moment and you're building a new position in it, just keep the position size small. But again, I'd be very surprised to see Xero take out that low. So to me, you're looking at an accumulation range there, which is an opportunity to look at adding it into your portfolio. Not doing an afterpay at the moment, and there we are to Newcrest. So we've now switched into stocks that are under algorithm sell signals, and by that the reference is the most current signal rather than the green box is the red marker at the top I'll move through a couple of these. So Santos is under sell conditions at the moment, as is Suncorp, which I'm not fond of Suncorp. Woodside Petroleum, we're still largely sticking with that at the moment. Transurban under sell, but I think it could recover from where it is. Origin under sell conditions, but is a recovery play, as I've discussed in prior recordings. Not doing in Dexus, not doing in APA at the moment. ASX, look for this to trigger maybe a buy signal around that $75. Amcor between 15 and 16. I think I'd look for that to come up with a buy signal. CSL, we're looking for a deeper sell-off in that, and we'll revisit that on the next buy signal. Telstra, again, I'd expect Telstra to switch to buy conditions on a slightly deeper sell-off. Qantas, we're not doing there at the moment. Ramsay, we expect that to switch to buy conditions in the coming months. Centre Group, not doing there at the moment. Medibank, wait for a deeper pullback and we'll see that shift to buy conditions. James Hardie Industries, a deeper sell-off, and then that'll switch back to buy conditions. And then there we are back to Endeavour. Just to finish this evening, what I want to do is click on the watch list and just go in and revisit what's been put on the blog, just to pick up on some of these ETFs. So what I've done here is clicked on watch list, gone into the drop down, I'm selecting recent blog posts. So this will capture the stocks that have been discussed on the blog in the last 30 days. And the same thing, I get the percentage gains to the top, organise them in buy, and we'll just move through these. So VentureX, copper mine over in West Australia, small cap, I like that. We're not doing anything on the short side of the Nasdaq yet. PEXA, we've added that into the managed fund as a small holding in our portfolio. Fortescue, we hold that in the managed fund. It's under buy conditions, as we've discussed, so I like that. Insurance Australia has been a recent addition. It's switched from sell conditions into buy, so it's been added into our top 50 portfolio, and also a holding in our fund. BlueScope Steel under algorithm buy conditions there, so the sell-off from 26 down to 19. Another buy signal there, so just drawing your attention to that. iShares Asia, this is one of my preferred ETFs for exposure into a recovery play in Asia. Oz Minerals under buy conditions, so support there around that $20 level. The fuel ETFs, so I've been on the long side of this. This and Woodside Petroleum's largely been our preferred energy plays, and that remains under buy conditions. The OZR, which is a basket trade to exposure of resource stocks, and I've posted on the blog and screenshot the companies that you're getting exposure to as part of this fund. So if you want to go back, you can find that post on the blog. But that's under algorithm buy signals, and I think that's one way of playing a recovery in the iron ore stocks. Northern Star remains our preferred gold play. BHP, as I've mentioned, we've been buying that. The Banks ETF, so we're continuing to hold this in our high conviction portfolio, and we'll reassess it as we see these bank results come through in the US. The iShares dividend, this is the IHD. I touched on this at the beginning of the recording. So we've had the correction from sort of 15 down to 13. Still on the low side of that moving average. But you can see a little bit of buying interest in this today. But I expect we're getting pretty close to support here, where that's likely to move higher. So we've been buyers of that. NAB under buy conditions. Coles under buy. So quite comfortable with Coles there. Cleanaway's doing well. That's one of our core holdings. That food ETF, as I mentioned, support there around that 670. It's now pushing up to around $7. The ILC, this is the iShares ASX 20. It's corrected from around 30.42 down to 28. I created a band there from 26 to 28, so you can think about that if you're just looking for broad exposure to the top 20. The global healthcare, so again, either this one, which is the IXJ, or the HLTH, and I'll try to put a post on the blog tomorrow or Wednesday on the VanEck Health ETF, and I'll screenshot the top holdings there. Reese, this correction here from 26 down to 17 starting to look interesting to me, and you might want to add that one to your watch list. Wesfarmers we covered tonight. Link, I think that's a long-term recovery play. Don't mind Link and Computershare. Altium's one of my preferred tech exposures. Horizon, new addition to the portfolio, as is Zip. So I've been sitting on the sideline here with this one for a few months, but finally added some exposure in Zip into our managed fund and our high conviction portfolio. Brambles I've covered. Cochlear, looking for that to recover. Big, well, keep an eye on this. I don't think it sits really in the top of my high conviction ideas, but we are seeing the last earnings result I thought was reasonably solid, so I'd like to see a continuation of that when we see the December numbers early in the new year, but continue to watch the fundamentals on that. The China, so here's where we saw the recovery, so from almost 10% off the lows last week. This is the IZZ China Large Cap ETF. So looking for this to get back up into around that $60 level. The BBOS not doing there on the short side. Woodside Petroleum, so one of the strategies here could be to stay long this as long as it sits above that average if it rolled over. But it's hard to see energy prices having a material pullback from where they are at the moment. So Woodside pretty comfortable with that. CIMIC, I covered that. Amcor, maybe somewhere, as it gets below this $16 level, and we're getting close to where that switches to algorithm buy conditions. James Hardy I covered, and there we are back to VXR. So thank you for listening in to tonight, and if you'd like to talk to me further